Flynn is at the CME Group. Oil now down 6 days in a row. It's lost about half of its value, Phil, from its 52-week high. What should we be watching this week in terms of what's going to move the cost of crude?
Any stability in the global stock markets, because let's face it, the reason why oil is down, we can talk about an oil glut, but it's really because of the concerns about the global economy. You can talk about, a glut going away if you have demand expectations, but when you have turmoil in the global markets, those prices are down. We also saw another drop in gasoline prices, national average at $1.96. That should spur some more demand, as we come into this month, but it's going to be very difficult for oil to find stability unless we get stability in the global markets. $32, the next big support. Back to you.
Phil, stay right there. I want to bring in Anthony in terms of what we've seen in the sell-off. But the bigger picture for our country is, how bad does the energy business continue to get hit? The industrial economy, as Maria's talked about for months now, is essentially in a recession. How bad, and what kind of impact does that have on the financial markets with some of these highly levered shale plays and these smaller producers?
Okay, so there's a lot there. So I'll break it down into three points.
I pulled a presidential press conference thing where I asked eight questions in a row.
All right, so I'm going to break it down into three different issues. One, the lower price is leading to a recession in North Dakota, South Dakota, and Texas. That's roughly 9% of the GDP of the United States is being affected by this lower price. Number two, there's going to be a huge opportunity here in the distressed credit side for these E&P producers now that are going to have to restructure themselves because they were operating, Dagan, off of a price $60, $70 per barrel, and they're now in the 30s. And so that's a major opportunity for the hedge fund community to step in there at some point. Last point that I'll make, the Fed got this wrong. And everyone at this table knows this. About a year and a half ago, they said lower prices would be a boon to the economy, and it, in fact, has not been. It just shows you how energy dependent now we are as a global potential exporter of energy going forward.
So I think another thing to take.
How's that, Dagan? Was that all right?
It was muy excellent.
I think another thing to take away from this is, China and cheap debt has really changed the equation when it's come to commodities, especially oil. And going back to what you had just said, Anthony, we look at last quarter earnings when it came to the E&P publicly traded companies, and they were forecasting $50 a barrel of oil for this year. Earnings season is going to start this week. We're going to get a major bulk next week, and what we need to see is what managements are going to say. How are they going to navigate this oil market given that we have excess capacity? And think about this, China matters because they are the world's largest consumer of oil, right? And capacity was built out for them. Where's that excess capacity going to go? So we're going to need to hear the E&P producers give us guidance on what they think.
Hey, Phil, how many of these companies go out of business in the next 6 to 12 months, you think? They're bound to be estimates.
There's going to be a ton of them. I'm hearing 10 or 15. We call a lot of these companies the walking dead in the industry. We're waiting for the next ones to fall, and this recent drop is going to speed that process along. We're hearing a lot of concerns that banks are getting ready to pull credit lines from a lot of these companies right now because there's no hope that these prices are going to come back. So the bankers aren't really interested in extending a lot of these loans or restructuring.
And one of the reasons why they actually haven't gone out of business yet is because they're actually just selling as much oil as possible, and that's why we're seeing the price go down, right?
Right. Morgan, you want to get in here?
Right. No, I was just going to say this relates to the Middle East and to Saudi Arabia. Right. We haven't seen any really big moves by OPEC that I think any of us expected. And, of course, I think we're all shocked by the $98 billion deficit that Saudi posted. Does anybody have any thoughts on this, on what the Deputy Crown Prince said about Aramco potentially going public? For me, that just screamed.
Phil, you answer that.
Listen, this could be absolutely huge, but it's also a sign that the Saudis are feeling the pain. I mean, just to even consider an IPO at this point means that they feel that there are major problems and that oil prices aren't going up anytime soon. So to me, for them to even consider this possibility, they think the global energy landscape has changed for the long term.
Phil, good to see you. We'll see you in a little while. Phil Flynn at the CME for us. Fresh